Hi, and thanks for stopping by. My name's Larry Weinstein, and I'm both a CPA and the founder of SolveMyTaxProblems.com. And today I wanted to answer a question that I hear quite a bit, and is it possible that the amount that the IRS says that I owe is incorrect? The answer to that is, generally speaking, they're going to have the correct balances, but there's one instance that really comes to mind in which the balance that the IRS has is going to be incorrect. And the way that that would happen is if in any particular year the IRS did what we call an SFR, a substitute for a return, a service filed return. In other words, you, the taxpayer, never filed a tax return for a particular year. What happens? Well, the IRS has information that's reported to them, wage and income information, W-2s, 1099s for interest and dividend, 1099s from having a consulting business or being an independent contractor, a 1099 MISC, maybe a 1099-R as a pension distribution, maybe a 1099-B sale of stocks. So what happens if you don't file the tax return? The IRS is going to prepare it for you. And what they're going to do is they're going to file you, generally speaking, as a single person with no dependents other than yourself, when in fact you might be married and have children. They're going to take all of the income information, they're going to put it on the tax return, and they're going to make no attempt to find out what your itemized deductions are. If you have stock sales, they're going to make no attempt to find out what the cost basis of that stock was. They're going to take the total proceeds and call it game. If you are self-employed and you get a 1099 MISC, miscellaneous, then whatever the amount on the summation of those 1099s are, they're going to call that income and pure profit. They're not going to make any attempt to deduct legitimate business expenses that you truly may have incurred, such as rent, cost of sales, salaries, car expenses, those types of things. So if you have, for example, $100,000 in 1099, they're going to drop it down and say you have $100,000 in 1099 income, and that's all taxable. When in fact you might have only made net after expenses, say $50,000. So that's one of the most common reasons that I see that the IRS has the amount that they say that you owe them incorrect, and it's because they prepared the tax return and they didn't have all of the information. They made no attempt to find the information. That's really not their responsibility, and they have the tax too high. That's it for today's session. I look forward to talking to you again real soon.